Time for the market report. Looks like prices back on an upswing last week, likely due to the WASDE and other global factors.
That's right, Mike. You know, the WASDE gives us an opportunity to get an idea of how things look from a technical perspective. It is, after all, influenced by action on the ground, plus weather. But we'll get into all of that. But first, the numbers. Going back up, as we said, then the WASDE report. What did it actually say? And finally, our row report, where we dissect the current issues affecting the markets. Markets on the upswing last week. All commodities we follow up. Row crops, livestock, everything. Let's take a look. Last week's biggest gain, lumber up $109.50. Row crops no slouch either. Soybeans up 45.5 cents. Corn also up 32.25 cents as well. Not to mention, wheat also up 30.25 cents. The reason? We'll get into it. One reason for the rebound, this month's WASDE report. Based on what we've seen, looks like supplies and production not as strong as we thought. Doesn't mean we're at a shortage yet, but it certainly gives the markets something to think about. Here's what it said.
U.S. wheat supplies raised 2 million bushels from last month. Yield raised 0.2 bushels an acre. Food use raised 6 million bushels. Exports increased 25 million, while ending stocks down 29 million. Season average farm price, $9.25 per bushel. Global wheat supplies up 4.3 million tons, production up primarily from Russia, Australia, and China. World consumption up 4.4 million tons, and global trade increased 3.2 million tons. U.S. corn production, 14.4 billion bushels down, and yield forecast down 1.6 bushels per acre. Feed and residual use down 25 million bushels due to smaller crop. Exports also lowered 25 million bushels. Season average farm price, $6.65 per bushel. Global corn production down, EU corn suffering heat and dryness, lessening projected crop. Ukraine corn production projected higher. U.S. rice supplies up due to higher production, 1.7 million hundredweight. Projected ending stocks raised, 36.5 million hundredweight. Season average farm price, a record $18.80 per hundredweight. Global rice supplies lowered 4.1 million tons due to lower production for Bangladesh and India. World use up 518.7 million tons. Ending stocks lowered 4.3 million tons. U.S. soybean production up 26 million bushels despite lower harvested area, which is down 0.3 million acres. Supplies projected 36 million bushels higher. Ending stocks also up 15 million. Season average farm price $14.35 per bushel. Global soybean production up, mainly from China. Crush also raised due to Brazil. Global soybean stocks raised. U.S. red meat and poultry production slightly higher. Beef production raised, pork production lowered. Broiler production raised, while turkey production lowered. Egg production raised as well. U.S. milk production forecasts raised due to higher inventory and output. All milk price forecast is $25.20 per hundredweight. U.S. cotton beginning stocks up, exports down 2 million bales. Ending stocks 600,000 bales lower. Season average farm price 97 cents per pound. Global cotton production 3.1 million bales lower. Consumption 800,000 bales lower. World trade 1.8 million bales lower.
So now that we have the context, what was the true impact? Well, not as much as you'd think. Market analyst Naomi Blohm says many of these things were expected and that prices may have seen their peak for now.
A lot of the things were expected. A few little pop-ups of, oh, that's a little bit surprising, were there, but ultimately no big dramatic changes. So they lowered the planted acres for corn, soybeans, and wheat. And I think for soybeans, we were looking for that increase to happen. So that was a little bit of a surprise. And on corn, they did lower yield, as people were thinking, pretty much in line with pre-report expectations. So not a big surprise there. And for soybeans, the bigger surprise was that they actually increased the yield just a little bit. So going forward, we're in a situation where in the bigger picture, yeah, the ending stocks for corn are a little bit tighter than they were last month. And the ending stocks for soybeans are now a little bit bigger than they were last month. And the wheat ending stocks now are a little bit lower than they were last month. So it's enough of a dramatic non-event that the market is going to keep, I think, marching sideways, similar to what it did last year. So going forward, we'll keep watching weather, but this report today did not give us enough new, fresh, bullish news to justify any price breakout higher. And at the same time, if we see prices kind of set back a little bit lower, they should be well supported as we go into fall. let me just be blunt. If people are waiting for $7 or $8 corn or dramatically higher prices, we're in a point right now of reset or pause. And all of those stars that aligned so perfectly last year to give us $8 corn, they're behind us. So now going forward, we're at the pause here, and markets probably trade sideways until we can get to know some more information. You need confirmation that this corn crop is below 170 bushels. You would need confirmation that the soybean crop would be lower than probably 45 bushels. You're going to need to see demand pick up. You have to have early frost and then compromised by all of a sudden wet late harvest. So I guess what I'm trying to say, for the stars to align from here to get those higher prices, it's probably not going to happen in the short term.
And that's it for a deeper look into the markets. Let's keep in mind that prices are always looking for a balance that'll never come. There's always something to make them move.